Well, I think what's happening here is retail traders are getting into short positions down here at the lows, okay? But who is giving those short positions to retail traders? Okay? The banks are. How's it going, fellow traders? Magic Trader here, and it is September 11, 2023. Here is a brief snapshot of the positions held by the institutions as of September 5th, 2023. And welcome back. Another fresh week we have here as the summer begins to end, just beginning to end, and the fall is slowly approaching. The leaves are starting to change colors in the trees, and it's quite nice to see. So let's begin now by looking at gold. All right, folks, gold. Have you seen here with the short positions, they increased them from 74, 85, 111, 124. Now they're decreasing shorts. Decreasing shorts as price rallies up into supply, okay? They're decreasing shorts as price is rallying up into supply. They came just pips within hitting the supply area and price declined. Okay, so price is declining. And now we're contacting some demand on the lower time frame. So what does this mean? Why is this taking place? Well, I think what's happening here is retail traders are getting into short positions down here at the lows, okay? But who is giving those short positions to retail traders? Okay? The banks are. So banks are offloading their shorts to retail as they're accumulating shorts as price is rallying up. I think what's likely going to happen is we're going to see some more bearish pressure come into play here, and we'll see the shorts start to increase again, all right? But that's only when retail offload their short positions back to the banks, and then we'll probably see more momentum to the downside. So we're watching for that. What I can tell you is that retail are about 53% short right now. Okay, 53% short. And if that number continues to build, which I believe will likely be the case, then we'll see more pressure start to build to the downside eventually when they start to offload those shorts once again, because they're doing that. They did that now. And they'll start getting in long at the highs, price will decline, and they'll start getting in short again. And then they'll reverse price up. But from what I can share with you now, when we're looking at the weekly chart, we've just come very close to hitting this weekly area of supply. It is a weak area of supply, so we're not expecting much from it, but it could be used to facilitate a move much further down. Okay? Oil. Look at that. Starting to get aggressive with their long positions. Do you see that? Longs, 362, 359, and then all of a sudden, boom. A big shot and a big injection with long positions here. 359 to 400,000. The sell is starting to turn red, okay? The coloration of the cells here is starting to turn blue. What does that tell us? Bullish bias, right? And that came as price was increasing from the big buys, big rally up. Now what? Now price is contacting an area of supply. We can see just the top of it right now. And I posted over this weekend some articles that were coming out regarding Bloomberg thinking that oil was going to continue higher, right? And this is right as supply is about to come into play. So be careful with that, because I wouldn't want to be going long as supply is coming into play on oil. Okay, just saying. Another thing is, they said the dollar strength could continue by oil becoming stronger. And this was coming right at a point where we were expecting a little bit of a drop down here in the dollar because of what's taking place with the euro, all right? So let's look at short positions. Increasing, becoming a little bit aggressive. Coloration of the cells here went from bullish to somewhat bearish, a little bit of neutrality there. Longs are cooled off, so not as important here, but shorts are a little bit more aggressive. But the fact that the coloration here is not aggressive, I would tend to want to hold off trading the dollar right now. Okay, I think there's better assets to be trading besides the dollar. Aussie, very aggressive with shorts again. Okay, very aggressive with shorts. 135, 137. They've reached maximum size with shorts right now. Maximum size. So if they start closing off, it'll likely fuel a move to the upside, because every time they closed off after becoming aggressive with their positions, it fueled a move to the upside. So looks like this is about to take place once again. All right, just speculating here. I can tell you retail right now are 50-50. They don't know which direction to go, okay? But my bias is to the upside simply because of positions being maxed out. USCAD, this one's a good one. Look at that. Look at long positions going from cooled off to significantly aggressive, 70,000, okay? And this is taking place as price was consolidating right before the rally. Okay, do you see that? Nice rally up in price here. And so if we look at shorts, they've also been accumulating a little bit of shorts. But one thing I would be pointing out is this here. Okay, you see the total size starting to get aggressive. We should take note of that. I don't know exactly what that means for us right at this moment, but it's something that I want to pay attention to. Okay. Coloration of the cells starting to go from red to a little bit more neutral with a tinge of bullishness there. A tinge of bullishness, okay? A little bit of net positions going into the positive territory, but we just came from bearish into positive. It's just happening now. It's not sustainable from what I'm seeing. So we need a little bit more to sustain this move to the upside, okay? Dollar showing some interest in wanting to drop because of the euro, but likely we will see more highs on this one. Okay, that's just speculation based on what I'm seeing, but I think there's a good chance we'll see more highs. All right, retail traders are about 69% short right now, 69% short, and this is as price was rallying up, so they're adding shorts as price is going up. Not a good thing to be doing. Okay. Next, US Swiss. Now, we've been talking about this one and the stair stepper action that we've been getting here. Remember the stair steppers right here? Right here, stair steppers right into supply. Now we've hit supply. The likely move is we get a reaction to the downside. Okay? But let me bring your attention to something else. Down here on the monthly chart, what do we have down here? You see that? That's a demand area. There is bullish pressure coming from here. All right, bullish pressure. So if this were to get taken out, we'd see more bullish pressure come into play. But this supply area needs to be removed first. Okay. US Swiss short, 66% are short right now. As price has been rallying, they're mostly short retail traders. Okay, which is not a good sign. Not what they should have been. Should have been long all this time. Okay. Euro. Look at longs. They recently offloaded long positions. Now they're starting to pile back into them. Okay. We talked about this in some detail in today's level 1 class that we did with students at the school, and explained the intricacies of why they're doing what they're doing. But so I won't go into too much detail. But what I will say is you can see that they started to increase shorts here, okay? Right here. Starting to increase shorts right there. Why do you think they were starting to increase shorts there? Why do you think? We're at the lows. Remember, just last week, retail traders were about 85% long right now, or they were 85% long last week. Now they are 71%. Okay, they are offloading longs for what? That's right, for shorts. Who do you think is going to give them those shorts? Okay, so that is what's fueling this move that we're seeing now in the markets to the upside. Just fell short of hitting demand, but it doesn't matter. Now's a time where they're starting to pile into shorts, so the banks are going to push price to the upside. Okay. So that's what's taking place with the euro. Let's move on. Take a look at the pound. They went from massively aggressive with long positions. They took their profits from 135 all the way down to 83. Then they started to add back into long positions down here. Okay? They started to add to long positions here. Well, before the drop. Okay? And now at the lows, what do you think is likely happening? You think they're doing the same thing? Probably. Look at retail traders, 57% long. Okay? 57% long. And they're adding to their shorts. And what's likely going to happen? Maybe a slight push to the upside. Why? Because those short positions that the retail traders have been accumulating, I'm pretty sure the banks want to take those back from them and push price lower. Because remember, selling shorts here means banks have to give it to them. And the banks don't want to be short here. They want to be short here so they can ride price to the downside. So this is just speculation from what I'm seeing on the charts. We'll have to wait and see how it unfolds, but likely this is what will take place. US dollar, Japanese yen. Remember, they were aggressive with their short positions, and they took profits on them, fueling a move to the downside. Now they're starting to get aggressive again. We haven't reached numbers like we had before, 159s. We're only at 134, but look how much higher we are with price. Price before made it here with longs at 159. Now 134, they're over here. Okay? So maybe a slight move to the downside, but pressure is very, very bullish. As you can see, when we look at the coloration of the cells here, bias is bullish. Here, bias is bullish. Okay? When we look at how neutral short positions are, okay, and how aggressive longs have been, it's clearly a bullish bias. I would wait for it to react to the downside from supply and then look for opportunities to get into the long side, right? But that's just me. All right, retail traders, what are they doing with their shorts or with their positions on US dollar, Japanese yen? They're 66% short. 66% short. They should be more long than short this time, but they're not. Okay, so they're 66% short, and that's what's taking place. Last but not least, Kiwi. Price was consolidating. Shorts are aggressive. Look at the coloration here. They're starting to turn a little bit red from neutral. Okay, here, that's what, 5 weeks of consistent growth to the downside, but not consistent enough for us to believe that price is just going to drop right from here. You know, maybe a little bit of a move to the upside and then drop. I'd like to see more cells red before we can establish that this is going to sustain itself. Okay, but the fact that shorts here are getting aggressive, that's telling me something good for a move to the downside. And the fact that longs have been cooled off for quite some time is also suggesting that over the longer period, you're likely going to see a push to the downside. Okay, and retail traders mostly long, 64%. Okay, they shouldn't be long right now; they should be short. That is what all the indications are telling us. All right, ladies and gentlemen, that is it. I hope you enjoyed today's session. We just started a level 1 class. If you're looking to learn how to trade supply and demand, use the CFTC data, how to locate buying from the institutions, how to time your trades, how to reduce your risk and get bigger potential on your trade rewards, come join us, www.whiteoakfx.com. We'd love to have you come and learn with us. All right, that's it. Take care. Have a good one. Talk to you later.